Hey everybody, it's Erik, co-founder, partner of Village Global, a network-driven venture firm. And this is Venture Stories, a podcast covering topics relating to tech and business with world-leading experts. Hey everybody, welcome to another episode of Venture Stories by Village Global. I'm here today with Kevin Kwok. Kevin, welcome to the podcast.
Thanks for having me.
Awesome. So Kevin, you are working on a course.
Yeah.
Please tell us more about that.
Yeah, working on a course on growth models. Casey Winters, who I used to work with at Greylock, where he was a kind of growth expert in residence. We've discussed a lot. It's kind of around how to think about loops and network effects and all these things as they relate to kind of companies. And it's on with a program called Reforge, which was started by Brian Balfour and Andrew Chen. And I think, part of our thinking behind it was like all four of us had been discussing how people thought about product and growth and the overly focused on kind of funnels was the wrong approach to it. And we'd all been kind of talking about this pairwise and together. And then, I think Brian and Andrew and Casey all have a strong bias like you on kind of how do we share the knowledge with the community and kind of push that forward with people who are really working with the actual data and seeing it. And so we thought it'd be a great one to do with the program.
So what are loops? And describe the difference between funnels and loops.
Yeah, definitely. I think the biggest difference between loops and funnels is that loops are compounding. And I think that, most people, when they look at funnels, you kind of start from the top and you're like, is my top of funnel broken? And once you fix that, you kind of get to the next part of it and you're like, hey, maybe I can improve conversion. And you keep going down that chain, and that's super useful. But if you look at kind of the most successful companies, everything starts to decay over time if it's not getting better. And a lot of times that's because you kind of saturate the market, or you get all the easy customers, and then you start getting to customers who care less about the kind of value of your product, or all sorts of things start kind of breaking apart. And so loops is kind of this idea of you need something that it needs to be a closed system where it actually gets better over time and compounds. And how do you actually model out those systems, which, a lot of our both analytics tools and kind of how we think about these things aren't really naturally built for, because they're built for the thing kind of being a linear flow and not actually affecting itself.
Can you give an example of loops and maybe, via a product?
Yeah, definitely. Yeah, so definitely can go through a bunch of examples. I think, one of the most common ones that people think about is network effects, right? And so network effects are kind of this thing that everybody knows they should love. And then you get into the details of how do you measure it? Why really does it exist? How do you create them? And everything gets a lot fuzzier. And so I think that, when people kind of think about the quantitative side of network effects and they look at it, they kind of view it as this kind of bonus free stuff that came along with it, right? They're like, I built my product. Here's what its normal usage looks like. And then there's this kicker I get of just network effects if I have them. And it's kind of a Boolean value where you're like, I either don't have it or I have it. And if I have it, I just have this unaccounted for great stuff that starts happening. And I think, one of the reasons that happens is because we don't think about these systems as loops, right? We think about them as funnels. And what network effects are is really the fact that, as you get more people on it, it actually affects the quality of experience for everyone else. And so these things aren't independent. And if you view them as independent systems, then there always is this kind of weird bonus growth that you're getting. But once you realize that those are actually kind of one loop that can be modeled out, you can start to unpack, what is the formulas and relationships between each of them, and then figure out how to most improve that, right? Or actually figure out what the gradient of network effects are and how to tell if, one network effect is stronger or weaker, or what really is the scope of that. And so I guess one common example, how these loops affect your thinking, right, is, I think one distinction people have drawn historically is kind of between local network effects and global network effects. And, most of the time that's geographical when people think about Uber, Lyft, and launching, when should you launch in every city versus focus your resources on specific cities. But this is also true in things like, Pinterest, where it's not geographical, but it's about topics and, how much should you show people pins from every topic versus only, tables they like or chairs or specific kind of verticals of topics. And I think that, understanding those is about understanding what is the actual scope of the network effect, right? And where is it really playing out? Is it playing out across the entire user base? Is it playing out on, people who actually only care about the same topics? Is it playing out on is it only people who are in the same city who affect each other? And once you kind of can model out those systems, then you can have real discussions with the team around how do you make those trade-offs, right? Of investing in putting more resources into doubling down in one city versus saying, hey, we should launch everything immediately.
Yeah. Where do you see the misconceptions of either network effects or loops? Where do you see those most manifest?
Across the board, I think that, one area we see it a lot is in everyone drawing lessons from consumer companies over the last, 10 years. Because I think that, if you look at traditional enterprise companies, the reality is that a lot of them didn't necessarily have that many loops. Not because they weren't working on systems that could have them, but because, there just weren't that many iterations in everything they did. Each contract was worth so much money. There was only 100 companies that could be purchasers for their systems of the scale that they were building. Each process of that was selling to one person at a company that was making a decision worth, $1 million. And so you get into this thing where you don't get that many iterations to kind of figure out what is actually the loop and how to improve it over time because, in a year, you may only have a sales cycle that happens once. But then you look at kind of a bunch of the consumer companies of the last 10 years, and these companies are serving, orders of magnitude more customers. They're having orders of magnitude more interactions with each user. And so all of this means that it's becoming less of a thing where, you make 10 decisions and each one of those things has the biggest impact as much as you have all of these flows of kind of customers and actions, and you can actually start to understand what is the relationship between all of those and how do you track those and how do you think about, how to actually model those out and solve them. And so I think that consumer has kind of pushed a bunch of the frontier of that because you actually have enough of that of being able to track it in a closed system where you can see all of the results in a way that you can understand it. And then slowly that has kind of percolated out to all of these other areas. And, even enterprise has become, so many areas of enterprise have become so much more consumer-ish, right? Whether that's kind of SaaS or bottoms-up adoption, or whether that's kind of having it not be the CIO, but having, a bunch of buyers all across the companies who actually use the products before they buy it and kind of have a bunch more, the engagement and retention of these things actually matter a bunch more, right?
Yeah. How do you think, looking out maybe 20 years from now, how do you think we'll view growing either consumer companies or enterprise companies massively? Like, what will be different?
Yeah. Look, I don't know. I think the hope is that, like with all industries, the hope is that we get better at it collectively, right? And that, I think the test for it that is interesting is if you or me or anyone else here went back 20 years ago to a company, would we be much better at kind of helping these companies 20 years ago because of what we take for granted as being common knowledge now that, back then had been yet to be kind of fully figured out and fleshed out and shared across the community? And I think the answer is yes, right? I think that, that doesn't mean that you necessarily would succeed at building a company back 20 years ago, but you'd probably be way better off compared to somebody at the time just trying to figure out and still in an industry parsing through a lot of things we figured out. And then the same question is, 20 years from now, will our children look at us and say, I can't believe you were so stupid to be kind of thinking about your companies that way? or I can't believe that you ran companies, that were that old fashioned. And I think a few areas that'd be interesting to me on that, one of them is understanding this in Loops. And I think that the trend probably looks positive in that if you look at the analytics that companies have used over the last decade or 2 decades at their companies, it's actually improved significantly. And, part of that is you go back 20 years, it actually was significantly less trivial to say, how do I collect the data from my company and visualize it and give access to everyone for it? Whereas now we kind of take for granted that you could implement, any number of, whether it's Segment or Looker, any number of tools that would help you kind of pull together your data and analyze it. And then I think, we've also kind of pushed forward on what are the kind of charts we look at, right? And I remember when I first kind of started at Greylock, so many companies, when they came to pitch on the consumer side, would only show downloads, right? Mm-hmm. And then, even within a year or two, you started seeing them go down to engagement or retention. And then, now people are showing much more complex things, whether that's, cohort charts or kind of power user charts or whatever kinds of ways to better understand their companies. And so I think there's that part, which is, hopefully we'll see that keep pushing forward where we start to have built-in tools for understanding that kind of stuff. And then on the other side, I think that corporate structure would be interesting to see too, right? I mean, I think that marketplaces and social networks are a relatively recent, in their current incarnation, are a relatively recent type of business model that is, that level of kind of lack of centralization. And so I think that it's always interesting, what will the next generation of that look like, either on becoming more of ecosystems or in becoming more hybridized between how they think of traditional management versus kind of investing. Right?
Yeah. Nikhil Krishnan on Twitter asked you to get into your thoughts on the future of, org structure. Do you have a view either way, or how do you see it playing out?
Nikhil and I went to high school together, so lots of those discussions. Yeah, I mean, I think it's something that I think about a lot. I think there's a lot of directions that could go. One example of an org structure that is interesting to me currently is I think that there's a chance we look at Amazon years from now and it actually is kind of more like an investment vehicle than it is a company. So, you look at kind of how it's structured out and they write these 6-page memos for all funding decisions they do. Bezos kind of operates on a time scale where he's not really making decisions on things that are less than 2 or 3 years in importance. They have teams kind of running with their own kind of budget and GMs and deciding how to allocate their resources. And you keep looking at all of these factors and, the line between that and something like Berkshire Hathaway, right, starts to look blurrier and blurrier, except that, it probably has more advantages in terms of the kind of synergies between the departments. And so, I think one thought experiment is like, could you reach a point where Amazon could break itself up and still actually function as well? And, if you could, then how should we view that, right? Should we view that as more of the control provisions of a company or more of the control provisions of a investment vehicle? And I think across the board, I think that's something that's interesting because the structure that we view as corporations is a relatively recent phenomenon. I mean, the structure of corporations has been around for a few hundred years, but then you even look at the structure of like LLCs, and that's only been around for sub a few decades. And so there's lots of ways that can kind of shift. And I think the interesting question of that is like, how do we actually decrease a bunch of the coordination and transactional costs so that we can see these new interesting structures of it emerge that are better and more aligned? Because I think it's kind of a weird distinction that we have where we kind of view it as like people in your company and then everybody else. And the reality is, with marketplaces or social networks or open source projects, we've started to blur that line where we say there's people in the company, there's everyone else, but then there's these people who are not quite in the company, but actually do matter a lot to the company, whether that is kind of hosts on Airbnb or whether that is developers who contribute to open source. And part of the question is you can't control them in the same way directly. You can't even motivate them necessarily in the same way. But how do we think about aligning their incentives and what they care about with actually the company and the ecosystem? And I think that, all of those examples are kind of the early days of us figuring that out, and we'll see where it goes. Right?
And are crypto networks the answer? I mean, are you in the Chris Dixon's school of thought that you can, align all the incentives via tokens?
I mean, I think that crypto networks could be the answer. I think that they won't be the only answer for sure. And if they are the answer, I think that the thing that they're most useful for is in pushing a bunch of our conversation about what are the parts of the structures we have today that might not be ideal. And so, I think I think there's a few things that have, made me most kind of long-term bullish on crypto networks. And I think, one of them is kind of the stock market as we currently have it. And so I think if you look at the stock market today and you ask why it exists, there's a lot of reasons, and a lot of people might tell you that actually all of this trading activity shouldn't exist. Certainly it could be that there's a lot that is wasteful, but I think that the biggest bull argument for it is that, if you ran a company that was public or any company actually and wanted me to join, and we were trying to negotiate on what the value of equity you were giving me was worth, and that's important so that we're both aligned on the long-term interest of the company, it'd be very difficult for you to do that in a world where the stock market didn't exist, because, you'd say, hey, I think it's worth $5 billion because, my brother invested and said it was at a valuation of $5 billion. And also, trust me, I know how it's doing. It's worth $5 billion. And I wouldn't be able to trust any of that, right? Because, obviously your family has a conflict of interest. You have asymmetric information. You need kind of this third-party auditing service, hopefully a very distributed third-party auditing service that can say hey, not only are we saying this is the value of it, but it is heavily incented, there's a heavy economic incentive for us to not fake this, right? And if someone tried to change the value of a company, it would be very expensive, or they would have to be correct, right? And that's what the stock market basically does. And so in that way, the stock market, when we look at all the financial applications of crypto that have seemed much more natural fits than a lot of the ideas people have had in non-financial applications, I think it makes sense because, finance is kind of the crypto before crypto was possible. And, I think venture in some sense is that too, right? At the private markets is you could roughly think of as kind of this third party auditing validation service that gets paid somewhere between 15 to 25% tax rate in return for kind of authenticating what we think of as the fair market value of these companies. And so I think that, that's one half. And then the other half is that I think a lot of the struggle we've had is how do you store capital in terms of money, but capital in terms of the ability to do things. And so I think that, personal capital is kind of the basis of most action, right? It's what you or me decide we want to do, we can go do it. And then I think, two of the main other types are social capital and financial capital. Financial capital, I think, is, if you put aside the focus on money, is mainly around how can we make it so that it is storable and it is fungible. And the storable and fungible are important because it's what allows us to say, hey, actually, you can find different ways to store your work, your actions, etc., into a form that you could actually then save up or go use however you wanted, right? And everyone would accept it. And we use money as that. But, stored forms of personal capital don't necessarily have to look like money. And so I think that crypto is pushing along that as well, which is how can we kind of encode that and structure various forms of stored capital into our systems so that we can get that kind of social scalability of them that would be able to do it. Now, look, will the current ecosystem of it hit it? I think that's always an open question, right? I think the thing that certainly has already happened is that, you have a larger and larger group of people who are just willing to rethink what are the attributes of structures of corporations that they're allowed to play with. And 90% of that is probably completely wrong. But when the dust settles on it all, like if you get one or two major changes into how people think are kind of consensus structures we can have for it, then like that is actually a huge impact compared to, the amount of change we've seen in corporate structures over the last few hundred years.
Yeah. If you could, wave a wand and just say crypto or crypto networks will have this influence on either organizations or how we store financial capital or social capital, what would that wave of a wand be for you?
That's a good question. I'm not sure. I think one of the areas that I've thought about, though I think it has its own dangers, is, and I don't think this will be anywhere close to the first things to come out of crypto, but one of the areas I've thought about is how we think about social capital. Would it be better or worse if we actually encoded social capital more so than we do today?
And just to zoom out, can you first define financial capital as you define it?
Yeah. So I think that social capital is kind of, in opposition to personal capital or financial capital is kind of your ability to have someone else do something, right? And so unlike financial capital, it is less fungible. And so what that means, it's less fungible and it's done via staking dynamics. And so what that means, as an example, is, if I asked you for an introduction to, your co-founders at Village, my amount of, the amount we know each other is not transferable to how well I know them, right? It's just entirely different relationships. But that said, and so that's why it's non-fungible, or at least semi-fungible. That said, the way that, when any of us introduce two of our mutual friends together, I think if you were precise about what's actually happening there and you tried to quantify it, what's happening is that I stake some amount of my social capital with you, and you're actually staking your social capital with your co-founder, right? And, actually that varies. You could be staking anywhere from 0 to all of it. 0 is kind of that message that's like, hey, this person Kevin asked to meet, like, I don't know him, your call, you decide whether you want to or not. Versus 100, you're like, you have to absolutely meet this person. And then, if we meet, if the meeting goes well, as with staking, they kind of give you that back with a bonus, right? And if it goes badly, they kind of slash it, right? They slash 50% and they're like, hey, look, I'll take another meeting that you forced me to take, but like, I didn't enjoy this. Like, you really shouldn't introduce me like this, right? And part of what makes social capital effective is that it's not quantitative, right? Like nobody can ever directly observe what it is explicitly, which makes it have a lot more flexibility. But part of that also comes with a lack of scalability. And so, these trade-offs, we see them across the board. I remember, an example of this that a friend of mine, Eugene Wei, used to talk about a lot is kind of, you look at Snapchat. Snapchat has played around with kind of how they think about this social capital, because it used to be that they would tell you who your, top 3 friends were, right? And when they told you who your top 3 friends were, then you would look at it and you'd say, they made it very explicit. And once it was explicit, actually a lot of the benefits of social capital kind of eroded, because what ended up happening is people would realize they weren't in the top 3 friends of people that they otherwise thought they were. Because before, everybody was telling everybody that they were in their top 3 friends. And now there was a very explicit way for people to realize that they actually weren't. And this actually, in some sense, hurts the network effect of the system, right? Because it makes a lot of people realize that they aren't actually, it makes them realize that they weren't as close as they thought, or at least on a relative basis they weren't, when actually, it's probably a positive, beneficial thing of our social capital systems, that you can have multiple people think they're all, super, the closest friends to each other. Snapchat has since shifted that to a system that kind of has streaks, right? And streaks don't have this problem because they're by definition pairwise, right? Like, you can have streaks with everybody, and yes, you need to log on to Snapchat every day even more so, the more streaks you have with more people to maintain them. And so I think that, there's a lot that we already have social capital kind of encoded into a bunch of our platforms, but we don't talk about it as explicitly as we talk about financial capital. And so, it is one of these things that naturally has staking dynamics and semi-fungibility, which actually make it a thing that rhymes closer to things we should think about when we're thinking about what are systems that are innately only possible with crypto or with protocols. So I think like there's a bunch of learnings from that I hope get adopted. And then I think the other one is, which is a much harder one for us to do is how do we actually reach the point where we can start thinking about things that are only possible with crypto, right? And I think that, many of the ideas we currently see are things that already exist in the current world trying to be adapted to crypto. But for the most part, things that already exist in the world are already possible, right? And the question is, what are things that are not possible without, the specific attributes of crypto? And I think we're still early in kind of people figuring that out.
And your hunch is that it might be some of this encoding of social capital? Or?
No, I mean, I think that, I actually think it probably will less so be, something that looks directly social as much as how do we find things that have the same kind of attributes of, how do we find things where the things already implicitly kind of have the attributes that we talk about more explicitly and see more often in crypto, right? Whether that is kind of how you actually think about staking dynamics or whether that is how you actually have systems where you need some kind of public lighthouse or commons, but that can't be created without having economic alignment of incentives with some, larger body of people. And how do we actually think about systems that are native to that? Which, I think that the two systems I kind of look at as being most native to that currently are kind of the financial markets and then kind of how social capital works. And, that makes sense because kind of financial capital and social capital are the two that we most kind of talk about in that view. But I think that it's probably less so re-encoding those exact same ones as figuring out what are the lessons to draw from that, right?
You mentioned earlier about third-party auditing systems to help us join companies. What do you think about prediction markets as they're stock markets for all types of decisions? Yeah. Do you see a world in which that is, should we get dinner tonight? I don't know. Let's ask whether people will, we'd enjoy it or that sort of thing.
Yeah. So, and I think that prediction markets are super interesting, and I think they're interesting for a few reasons. I think it's still unclear which exactly will be the ones that take off. That said, I think the building primitives to lower the friction of creating them, I think is net hugely beneficial so that we can just have people actually experiment with that. But I think there's two reasons why I personally think that they're super interesting. I think one reason is that on a smaller scale, and a lot of this wouldn't even require prediction markets of the kind that, are being built by Augur or others. But there's one part which is like tracking things over time is probably something that we don't do enough before and after decisions that in general would probably be a very interesting data set to just see. And so even if you found out that there was not predictiveness on these things, I think it's a just super useful habit and practice that I wish was way less friction in general, because, I think you always kind of lie to yourself afterwards of what you actually think of how you actually felt about things beforehand. And so in general, I think that there's a lot of value to be had in kind of having the accountability of actually making predictions and then being able to go back and see. And I've always thought that that in general is a thing that would be a great just general cultural norm among groups of people if they all just actually made predictions, right? And went back and actually looked at what those were and kind of refactored their decision making off of that. That, of course, doesn't actually require prediction markets. Prediction markets are more about how do you scale that up and actually make it possible for that to be, way more kind of verifiable and massively distributed. But I think that prediction markets are super interesting because markets and everything is probably a trend that for a bunch of areas, we actually are probably liquidity constrained and we don't realize. And so I think that, I don't expect them to immediately take off because I think that it's actually very difficult to identify areas and industries that specifically have the characteristics where having prediction markets would unlock them. I actually don't think that is necessarily every market. I think that will actually take work of very focused specific teams to figure out what are the areas where having something that allows you to bring increased liquidity or have kind of third parties is kind of ascertain what is actually or it's important that you have third parties ascertain what is actually the price or state of it is something that is actually pretty difficult to find for the same reason that, everyone trying to start Uber for X companies kind of missed that the dynamics of those industries weren't the same as Uber, right? Or ride sharing, where you kind of had this dynamic where it was liquidity constrained because there was actually specialized knowledge required to be a driver. And it was really, Google Maps and ways that unlocked the liquidity on that. And the question is, what are those areas where prediction markets will actually unlock the liquidity on it? I think is a challenge, but I think that, the idea that we have hit the limits of all the things that should have markets on them is probably crazy, right? Because we have so few today.
In a world of kind of like markets and everything, like where would you worry in terms of market failures? Or like some people think that we need to solve market failures, which is more markets, and others think no, actually. Is something inherently.
Yeah. I think that, the more you create markets, or more specifically, I guess, or more generally, I guess I'd say the more you decentralize things, it introduces a different class of risk factors. And I think, we are currently seeing this, not just in our financial markets, we're also seeing this in our social platforms, right? And I think that there's a push people often make, which is why don't we just go backwards, right, to how it was before? And are these unsustainable risks that are existential that we actually should not touch at all? And, I think that there's valid critiques there, but I think that it's easy to say that. And I think that there's two main challenges with it. I think that the first challenge is that, the risk factors and benefits of these more decentralized systems aren't obviously worse than the risk factors and benefits of the systems before them. They're just different. And we're certainly living through the transition period where, we haven't actually fully figured out how they operate. But in general, I think the net decentralization of them, we should probably view as net beneficial because we've already seen tons of benefits from them, and we haven't yet even gotten that particularly good at it. That said, I do think that there are a bunch of risk factors that are novel. And so I think the biggest risk factors that are novel is that the attack profile of them is endogenous, not exogenous. And so what I mean by that is, when you have a fully centralized system, you don't need to be worried about yourself. You just need to be worried about the things that are not you.
Right.
And when you have systems that are more decentralized, it's like the horror movie where the phone call is coming from inside the house, right? And everything about that is just totally different, because you can't just say, stop, you can't do this. It's also, the most common way people try to solve problems that are exogenous is they try to become stronger. They try to centralize power and become stronger, but that's exactly the wrong thing to do in kind of these decentralized systems, because you can't make yourself stronger without making enemies inside the system stronger as well. And so instead, what you have to do is figure out how to build systems that are asymmetric, where it's costlier for enemies to be using them than it is for you to be using them. And so I think there's a whole class of issues that we're facing, in both our financial markets, social networks, etc., that are of that kind. And then I think there's a second class that people are also identifying, which is the fact that, when you look at a bunch of these networks, they have volatility. And actually, in general, I'd say that that it's unclear whether they have net more volatility than centralized systems. It's just that centralized systems only exhibit volatility in catastrophic collapse versus in kind of just general volatility. But it is true that, these systems have a bunch more volatility, and this ranges from the smallest, scale of, things like Uber have dynamic pricing, right? That make the price go up or down depending on demand, to things that are kind of much more serious, right? And so I think that when you look at this volatility, it's something that we need to get used to and figure out which areas of it we need to mitigate, which areas will just normalize over time. But, when you look at the stock market today, even after the '08 crisis, people who wanted to reform the system, nobody was talking about getting rid of the stock market, because we understand that this volatility is a price we accept in return for a bunch of the benefits that came from that increased liquidity. And so I think, the question that we have to get through is, as we introduce all of these new kind of networks and marketplaces and other platforms, this volatility will feel very uncomfortable because we're not used to it. But if we got used to it, would we actually look back and say we want to get rid of these? And if we actually weighed the true benefits and cons of these, would we net say that we want to get rid of them? Or actually, is it more that we're just the generation that is going through a bunch of the transition stages where we haven't figured it out yet, but, we get to decide how to figure it out, right?
Yeah. Earlier, you talked about the potential to encode more social capital. Can you say more about manifestations of what that could look like?
Yeah.
Is that reputation systems? Is that something else?
I think there's a lot of directions it could look like. And look, I think that there's a lot of risk in it as well, but I'll give some examples. Actually, I think the good example of this to me is kind of how I, and maybe some others, view Twitter, right? I think there's a lot of debate on Twitter and what it should look like in good and bad stuff. But I think that for myself and certainly for a lot of people, who I know in the Valley, Twitter has opened a lot of doors of just meeting people who you become very good friends with, having conversations and discussions that you otherwise wouldn't have had access to, and being able to kind of be a fly on the wall of others having those exact same conversations, right? And I think that part of why that works is because Twitter is a protocol where, it kind of pushed forward what the top of funnel of that looked like significantly, where for the most part, almost anyone can have read access, actually write access too, but certainly read access to almost any discussion happening there, right? And in some sense, the metaphor I like to use is like we didn't know what exactly was this before, but certainly now Twitter is almost like the on-chain of tech, right? Where there's tons of conversation happening off it. There's conversation happening on it. It's not actually necessarily true that the conversation on it is better or more true than the conversations that are happening off-chain, but it's common knowledge and it's accessible to anyone. And I think that there's a lot of advantages to having that, right? To having things that are actually permissionless and common knowledge, and anybody can kind of join in on them, because what it does is it makes it permissionless so that even though you may not know what the upside is, somebody else, thousands of other people can go figure out what the upside of those conversations is, whether that's to them or to you. And so, you obviously have to worry about, are there downsides to kind of saying things that are on chain in that way. But the upsides are kind of long tail and huge, because it means that anybody can kind of self-select into those, and they can start participating. And then you have a, permissionless way to actually figure out who are people who you didn't know at all, weren't actually people who, went to the same schools as you, have resumes that are, super impressive, work at companies that everyone knows. But you talk with them and you realize that actually you resonate a lot, right? And it makes it possible to kind of have that in a way that before people were far less common. It was far less common because, one, people were like, look, it's too high friction for me to say I want to go, invite a bunch of strangers to dinner at my house. And it also is something where I don't feel that comfortable kind of sharing a bunch of my conversations I'm having publicly. But then you have a system like this that is kind of public and on chain, and it allows a bunch more experimentation of that. And so I think that, obviously Twitter doesn't require anything crypto to be that. But I think that there's a interesting question to us, which is, if Twitter is one example of how much that frontier can be pushed out, can we push that frontier out way more in ways that also don't suffer some of the downsides of Twitter, which is, it's not particularly Sybil resistant, that allow us to actually figure out these systems that enable way more people who aren't currently served or able to participate in the current systems to actually kind of, permissionlessly enter them.
Right. So it was an interesting idea we brought up a few times, this idea of sort of sharing in public. One example, I was talking to someone, Nick Charles at Notation Capital, who was talking about, his fund is now participating in mining and participating in networks. And he just had this big post, and he came on the podcast and he was saying mining 1.0 was very, private and hush hush. Whereas mining 2.0, he's interested because there's a lot of things that haven't been figured out yet in thinking in public about it. And I was curious about it because, it's still a zero-sum game, but he thought that the gains, that it was more worth it to share with others, even though they might take some of his resources because of what he might learn from them and what he might gain from being seen as someone who thought of it first. It's just interesting when the incentives lead people to share things that were previously, better considered secrets.
Yeah, absolutely. And well, look, I think mining is a super interesting case study to watch play out because, mining is one of the kind of sub 5 areas of crypto that kind of have already established significant value creation and has historically been super centralized, right? And I think part of a lot of people's belief that all areas of crypto would get super decentralized has been this kind of waking up to, hey, look, we've decentralized some areas. What are actually the natural economies of scales or network effects or things that would cause centralization or decentralization at any area we're looking at? And, mining has obviously had a bunch of centralization on, capital and economies of scale of kind of producing them and a bunch of other areas. I think his point, though, is a super good one that I think we think of a lot for Silicon Valley because, compared to many other industries, Silicon Valley is probably one of the most open and most sharing. And part of that question is, why is that the case? How could you bring that to other industries? And is Silicon Valley actually at 80% of that or at 20% of that? And, I personally think that Silicon Valley is way ahead of other industries, but probably at 20%. And the first question is, why is it the case? And I think Silicon Valley is this way, not because, we're better humans or anything than other industries, but because we have specific dynamics of the structure of our industry that align people towards it. And specifically, some of those attributes are things like, hey, we actually have a system set up that has high churn rate in terms of people moving around. So you actually will not work at one company your entire life, but actually, work with many different groups of people. You also have this system where you can't quite tell the intern you have is going to be someone who starts a company you want to invest in, joins a VC firm and wants to invest in your company. You want to work together on some project together and start a company. And there's a bunch more fluidity and movement. And so, those dimensions, as well as the equity alignment structure we've created, which a lot of industries don't have made it so that it is in people's economic interest to kind of share more of their knowledge and kind of build out these networks. Now, of course, part of the other thing that has caused this is that if you look at Silicon Valley, there also is this, I think versus Hollywood, for example, there is this way in which equity alignment actually causes you to orient around the long term with each other. And most industries don't have this, right? And this goes back to what I was saying about the stock market and venture, which is that, without equity alignment, it's as a structure, it's hard to actually align people on a long enough time horizon. And the second bigger thing on it is that, the value of information decays. And so the more you think that the information you have today will be valuable in 10 years, the less incentive you have to share it with others versus kind of hoard it for yourself and kind of milk it for a decade. But if you think that the information you have is going to decay, next month, then you might as well share it with others and get credit for sharing it rather than hold on to it, to this depreciating asset. Right. And so historically, the value of information in Silicon Valley has kind of decayed at a much faster rate than it has in other industries. And that has made it way more economically dominant in Silicon Valley for people to share a bunch of their knowledge and to form these groups that kind of share this knowledge and all work together. And look, I think the interesting questions are one, how do you actually push that forward more? And also, how do you, at every scope of whether, you and your good friends or the Valley as a whole, improve that and increase that? And how do you actually, align yourselves with people who are kind of building that commons, right? Versus taking advantage of it, right, and kind of burning the commons.
It's interesting, this concept of like a personal board of directors. Yeah. It's sort of like a symbolic concept today, but it'd be interesting if that was actually actualized in some way. Like, would you give Mark Andreessen 0.5% of all future earnings if he was affiliated? Yeah, I might even do it just for the brand credit.
do you have a personal board of directors?
Not formal. I mean, I have mentors.
Yeah.
And I'll systematize, I'll chat with them every 3 months or every 6 months, but they don't have real skin in the game.
Yeah. It's funny because I was discussing this with someone about, do you know Pioneer?
Yeah, of course.
Yeah. So I was discussing with someone about Pioneer because, and I think they've changed the structure of the model. But I was looking at the original structure of the model and one of the thought experiments I was thinking about it with some friends is, well, if you could define exactly what the scope of engagement was, right? If you were you could pick anyone in the world and they'd meet with you weekly and care about how you do, what percentage would you give of your income? Would you be willing to give of your income, right? Would you be willing to give 8% of your income to someone if you could choose exactly who they were and they would meet with you weekly, which, obviously is not what Pioneer's model was. But I think that thought experiment is interesting because I think, the answer is pretty definitively yes, right, that I would, right? Yeah. And that's interesting because, I think that almost universally doesn't occur. Actually, maybe it occurs, but it's just called your family in some sense. Yeah. But it's not a crazy model. Now, of course, the question is, how can you guarantee that they would actually engage with you? But even before you get to those systems, I think that on non-financial capital ones, we're probably way under indexed. And so, for example, I think that you could roughly think of a curve where the x-axis is how close you are to somebody, and the y-axis is throughput of information or resonance or working together. And I think that, my belief that probably is not shared by most people is that the head of that curve is order of magnitude more power law than people think. And so this could be a completely incorrect belief. But one of my two core beliefs is that the amount of throughput of kind of resonance and information and all of that among people who are at the highest levels of trust with you is probably could be way higher than people actually have it. And that both means that there's many more gradients of trust than people realize. Because when people, I guess maybe similar to the Snapchat thing, when people say like, hey, this is the person I trust the most, I tend to believe that probably isn't true. Because unless you are comfortable saying like, I give them full access to my bank account and my email and every, document I have written, they probably aren't as high level of trust as they could be. Not that there's a wide swath of people you should go give that information to. Right. And then similarly, I think part of the question is like, how do you, like Twitter, push out the frontier of throughput with those people, right? And so, I think personal board of directors is a super interesting idea. Not because I think a board of directors is necessarily the most platonic structure, but because I think that in general, most people think too much in the box of what is the structure that they could have with these kinds of relationships. And so, these analogs that we have from companies where, in personal relationships, we feel like it's kind of sketchy to try to optimize them. A lot of people feel this thing where it's like, it feels like it's manipulative in some way. Whereas in companies, everybody is trying to figure out how, or at least in Silicon Valley, everyone is trying to figure out how to better structure all of these relationships and meetings to be, maximally useful to both sides. And I understand the queasiness. I've always disagreed with it because I think that the natural state, I guess this goes back to loops, like the natural state of all things, right? If they aren't compounding is entropy. And so for the same reason that when you and your college roommates don't live in the same city anymore, the amount you talk to them and see them naturally tends to fall, to way less frequently than when you were living together. You are subject to the whims of kind of proximity and recency if you aren't actually trying to figure out how to naturally make compounding kind of systems. And so I think that, to a point you've definitely talked a lot about on kind of career loops. I think that when you think about that in personal relationships, it's how do you actually decrease the friction of those? How do you structure those? How do you actually increase the throughput of those to unconstrain and compound them so that they actually are better for everyone? And taking the analogs from how we have structured some things at companies is a useful way to start on that, right?
I wonder, people sort of look at I'm going to take it to the most extreme place, which is like, imagine a baby that was adopted, but then the parents no longer cared for the baby or passed away. Yeah. And it's in a foster home or something, or a prisoner that just got out of prison. And not only do people not care about it, but actually have a stigma towards it. Like, if they could, I mean, it sounds so ridiculous, if they could ICO themselves or give other people incentives to help, is that a dystopian world? Some people would see that as I guess we call it neoliberalism or something. I don't know, or is that you could align incentives better?
Yeah.
If I knew that I have this vague sense of alignment with my college roommates who I haven't talked to in 10 years, I'd be more excited to care about that. And not even out of financial gain, but just out of some sense of duty. I don't know.
Yeah. And so I think it's a super interesting question, right? And even if you put aside financial incentive right. or alignment, I think there's a question which is how do you increase the kind of just even resonance so that even without that you get a similar effect. But I think it's a question that, I get the hesitations people have with a lot of it, because all decentralized systems, if you start to structure these things out, there clearly are abuse vectors on it, right? And we just haven't actually built out social norms and legal norms and kind of encoded norms to even understand or handle a bunch of those cases. That said, I think that, if you look at our current system from a kind of outsider lens, we have this system, right? But it only transfers genetically. Mm-hmm. And so we do have this system where there is everybody has groups of people that are, bound to them financially, socially, just personally, on a whole set of dimensions, and care a lot about each other's success, right? And, we don't view this as inherently bad.
Right.
There's clearly ways in which this is bad because this is, well, not bad, but this is, can be net harmful, right?
But we don't talk about genetic failures the way we talk about
but we don't view the system as inherently bad. We view those examples of nepotism or corruption or, the shame that people only help their family as being things that like we want to fix in the systems, but we don't view that as inherently bad that we have these kinds of bonds. But it's an interesting question because, like one way that you could view a lot of investment vehicles of high net worth individuals is like, instead of passing on the financial capital and knowledge capital and social capital only to their kids, they go pass it off to others in return for some take rate, right? And is that a net beneficial system to have? Like, actually, probably yes, right? To say like, not that you shouldn't pass anything to your children, but, actually you are really unconstrained on a bunch of resources, and we could reallocate those to people who actually would have good use of them, but don't have access to them. Now, do we have a system that is ideal for that? Like, no, probably not, because, even if you look at venture or finance or any of these areas, they really are optimizing on a very specific, narrow set of things that they are looking for that actually have a time horizon that's relatively short. And so are there a lot of examples of people who wouldn't ever get funding or network or anything like that from these existing models we have that are worthy, that we should want to get them? Actually, probably a ton of people. And so then the question is, can we figure out what are those systems that actually give a reason, whether that is financial or whether that's just personal satisfaction or, working together in the future or whatever, that get people to actually better kind of redistribute these kinds of resources that would unconstrain people into ways that would make them a lot happier and be net beneficial for society a lot more. I think that, we're the likelihood that we are super early on that and still constrained on that is very high.
Right. Let's zoom out a little bit. Talk about, let's get back to loops. Talk about how you see loops in the context of careers and how you see that perhaps what are the implications of that are maybe different from how people view careers today? Yeah.
I don't know that I am an authority to be speaking on anything related to careers, but I think there's a lot of ways in which I view loops as careers. I think that one of them is, like all loops, I think that the two main things to think about and is kind of what is constraining them and what are they compounding on. And so, I think that there's always all sorts of directions that people can go in their careers that they often struggle with, whether thinking about, how much should I be optimizing for kind of building this very narrow, strong skill set versus network versus kind of being a generalist versus all of these other dimensions. And I think the kind of one level lower framework to be thinking about it on is kind of, what is actually the thing that you're constrained on, right? Or what are the things that compound and when you apply that lens to it, which are the areas that actually would then kind of help you unblock the loop, the sequence of loops that is kind of how you think about, your career and all of the different resources of knowledge or network or skills or whatever that you're trying to build. I think that the other part, right, is like, how do you build out these ecosystems of loops that you have and are part of that will actually help you compound naturally? And so I think that, one thing that the Valley has been naturally good at is kind of embedding a bunch of these loops all across itself where, people, whether consciously or not, kind of find their tribe of people, and then they learn from them, they work with them, they go work with them somewhere else, they invest in them, they kind of have people to go talk to and pick their brain on various things they're thinking through and challenges they're having, and kind of having these ecosystems is super crucial. And so I think that, part of it is like, how do you actually find that tribe of people? How do you build out all of these kind of codependent loops so that you do actually compound together and figure out the set of people that for the next 5 decades you'll be working with in all of these different ways. And I think that when you look at how to build that out, that actually versus other industries where it is much more around kind of having a very clear deterministic path that is set and, a very clear set of things that is the optimal path of it, and bosses to be spending the time kind of meeting their needs. In the Valley, it's much more consumer than enterprise, right? In terms of there is just a much more fluid ecosystem of people all actually working together and trying to figure out how to find their own people they resonate with, and then structure out all of these different ways of working together.
Let's try to make it a bit more concrete. Maybe if we could talk about that last idea of, like, in terms of finding the people, is it as simple as starting a company and getting really smart people to join, or going to a really great college so that you're with all these people and having similar experiences as them? Or how should people be thinking about surrounding themselves with the people that most resonate with them?
Yeah.
And the algorithms for finding those people and evaluating them.
Yeah. I mean, I think there's a lot of different ways to go find the people you resonate with. I think that, one thing that I've certainly found for myself at least is that, there's historically, you would only find the people you resonated with at your company, in your college, at places where you spent a bunch of time. I think, one of the good things about the Valley has been that there's way more kind of ways to go find people, right? Whether that is at your company or other companies, or whether that is in kind of talking with people on Twitter, or that is going to events, or this podcast, right? And so I think that there's a lot more ways to find people, which is good. And in general, I think that, look, you are orders of magnitude better than I am about actually engaging in public, right? Like I have probably failed at writing blog posts at any rate other than like once every decade.
Your Twitter game has been strong lately.
Yeah, but I think that it's, we probably have still underweighted the returns on just a personal level of engaging in public and letting other people figure out that you are their kind of person, right? And that you care about the same kind of things that they care about. And then, one level down from that, I think that when you find the people you resonate with, it's about how do you increase that throughput. And so, I think some experiments that various groups of my friends and I have done that I think have been super, super valuable to me is, one example is some set of friends where if we ever are, talking to each other via email or text or Twitter or whatever, we actually just default opt into messaging multiple people with all those other people on the message, right? And, it's kind of similar to, I think, how Stripe has kind of done their email system, right, historically, of having things be default public and shared, and having this, and how Amazon has done with kind of their meetings, of having a lot of meetings among managers have kind of default read access of the employees where they could kind of sit in and see them, where, as long as you're not afraid of the downside of it, you just don't know what the upside is. And the upside tends to be a lot of benefits, like the person actually knows something that is useful to add to the conversation, or you just have this passively active channel of communication so that people know what's going on in each other's lives, and then when you do need to really talk about something, they have context or all of these other benefits. And so I think that there's a lot of ways to increase that throughput once you figure out the people you resonate with, where, the thing is like, how do you increase the resonance so that you have context so that when you need to think through a challenge you're having, they already kind of know how you think the situation you're in. When you kind of are thinking about something, they can actually kind of easily, frictionlessly chime in and kind of push your thinking. And just, increasing that, I think also has a huge benefit.
Give an example of both something that compounds in someone's career and something that is a constraint, and either or it could be something personal experience, something you think I've experienced or someone else perhaps, or just like an example of. Yeah,
definitely. So I think that these examples can vary across a bunch of people, but some examples of it are, for example, I think that constraints tend to be things where there's a specific thing that is adding friction or blocking you, right? And so, I think that there's a lot of, constraints exist even not in loops, and there's a lot of traditional career paths that have each thing kind of being one constraint after another, right? I think for a lot of people, the most common one is kind of feeling like they need to go to business school in order to advance in a lot of industries, right? Where if you just don't have it, you can go do all of these other things, but then at the end of the day, people look at you and they're like, but have you been to business school, right? And so I think that there's a lot of areas where people feel these things where they, have one specific thing that is kind of blocking their ability to kind of keep going irrespective of everything else. Compounding, I think, happens all the time in other industries, but is more focused by domain. But in tech, I think that there's a lot of areas you can compound in, right? I think that network is, for example, a great area because, it kind of takes on a life of its own, right? Like I remember when I first moved to the Valley and was working at Greylock, at some point they're like, go talk to a bunch of companies, go find a bunch of companies and talk to a bunch of companies. It's like, I don't know anybody. There's no reason anyone should talk to me. Right. Like, there's not really, like, it feels, I'm relatively antisocial. Like, it feels awkward trying to figure out, how to go do that, right? And now I look at it and by no means do I think that, I'm anything special on that regard, but you've built up over the years, you built up all these people who know you, like you, know how you think, what you care about, what you could help them with, like you go to each other's wedding, like it's just all of these things compound on themselves, right? And it helps push you in directions that you wouldn't have otherwise gone and figured out. And so I think that there's a bunch that is, how do you kind of bootstrap or unconstrain yourself on things that don't currently exist? But then after some point, you start to find these flows of, whether it's like the natural ways that I'm sure doing this podcast has pulled you into all sorts of different areas and rabbit holes that you kind of dive to a certain depth on with them. But then you have conversations with people that help kind of build your knowledge on it and help you see all the different paths they go down, and then keep just pulling at that, right? And similarly, I think that, that was my experience as well, right? With Greylock is, when I went in, there was so few areas that I'd say I had any relevant knowledge on or particular network in or any of these. And, after you start actually building out knowledge and talking with more people and helping companies kind of think through their challenges, you start to understand a bunch of these domains. And then, one level up from that, I think the part that I certainly care about a lot, whether it proves to be useful or not, is certainly an open question, is kind of how do we all figure out how to generalize the things we are learning so that they're applicable across domains and so that other people can find them and use them too, right? And I think that, just like software is kind of an abstraction machine of saying, how do we do things, but then package them up and figure out their parameters so that we can kind of let others do them without the cost that it took us to do it. And also, how to be applicable across a wider area of things. I think the same is true for all of the things that we do, right? Which is, how do we go figure out what are actually the underlying principles that are kind of the structures that dictate how what makes companies successful or not successful, or why certain industries play out the way they do, or how to think about the different challenges that people have at their companies or things like that.
We're talking offline and I was sharing my sort of evolving thesis that I believe there are a few different things that can be both constraints or compounding depending on whether you're strong or weak at them. One is network we talked about. Another is brand, or even what I would say, like legibility, the ability to be branded, like is your skill easily communicable and translatable. And then financial capital, and then also knowledge and skills. And I posited that it's much easier to get the others if you have knowledge and skills. You can get a network, brand, and financial capital. They sort of fall into place much quicker or easier. But it's the same is not true the other way around. Where do you agree or disagree, or how do you view that?
I can't tell whether I think it is always true. I think it is often true. And the reason why is because I think it is less understood and less deterministic of what compounds in more network-based things. And it doesn't actually mean to me that it's less valuable, but I think that the thing is that knowledge and skills are a very specific amount of kind of value creation, right? And network-based ones are much more around understanding what was actually the constraint of this larger loop of people and understanding how the thing you're doing kind of unblocks it. And I think that when you find the areas where that is true, I actually think it creates, a massive amount of value. But the question is, which are the areas where, and that's specific to each kind of area of where it is actually blocked. And then also, do people also correctly value that, right? And do people underweight the value of it? And so I think that it certainly is true that value and skills tend to be a very useful way to bootstrap up that. That said, I think that at scale, probably, the ability to scale up you compounding in value in skills, it tends to be less scalable, right, than figuring out how to actually unblock a bunch of people to have everyone kind of contributing to it. And, an example of it is actually originally part of the reason I was interested in doing this course with Reforge is because I think that, it's one thing and a useful thing to kind of have a bunch of classes on growth or retention that are helping people learn valuable skills. But I actually think that long term, the thing that probably compounds the most, similar to what you guys are doing at Village is how do you use that to bootstrap it? But how do you also then pull together a bunch of people into a community together who are all kind of thinking about the same problems, care about getting better and improving, know that they all are kind of care about the same thing, and how do you actually kind of unconstrain the throughput of that network, right? And having them kind of not just learn the thing, but learn it together and then be able to talk and talk through the things with each other and build out those ties. And I think that the same is true across all of these domains, right? Is like, it always is trying to figure out what is the thing that is most constraining these industries. It always is useful to, have more people with more knowledge and more skills, but sometimes that's not necessarily the thing that's most constraining some area, right? And so part of it is figuring out which it is.
And for people who are listening, what would you is a common constraint to help them understand better? Like, they might be asking, what's constraining me?
Yeah.
How do people understand what's constraining them and how to unblock that?
Yeah. I'll give an example of a place where I feel like a lot of people don't realize they are constrained and are constrained. I have a lot of friends who are, PMs or working growth or other areas. And they often, struggle to find other PMs who have the same challenges that they have. And so they tend to find that it's, they're like, their jobs are too different. The companies are too different. It's not that useful to go talk to these other people about the challenges they're facing. But in general, I probably tend to disagree with that. And I think that they really are just constrained on having too sparse a number of people they've talked to in too high dimensional a field. And so I think it is true that product, because, is a relatively recent field that is ill-defined, has a lot of different attributes upon which it differs. And so being PMs that, you and one random other PM are less likely to have that similar experiences. But most PMs know 10 other PMs, 5 who they went to college with, 5 they work with. And then they're surprised that there's not that much transferability or generalizability in those conversations. But they're probably talking to way too few people. If they were talking to 100 PMs, would they actually feel this way, or would they actually realize that they start to feel what is the shape of companies that is similar to theirs, even if not competitors? Kind of what are those conversations that are useful? And in general, I think that this theme is probably consistent across a bunch of dimensions, right? Like even people talking about joining companies, one of the things that has always kind of, baffled or bemused me is that I talk to a lot of people who are thinking about joining companies, and they've spent less time diligencing the company than I spend diligencing companies that we invest in venture, right? And that's always been kind of funny to me, because a VC firm does care a lot about its investment, but for an individual, right, you're committing 5+ years of your life with no other companies you're working with to a company. And that seems like a way more important decision with way less diligence done. And so I think that, like when I look at examples like that, I think that does push me on this question, which is everybody talking to an order of magnitude less people than they should be, and spending an order of magnitude less time thinking about, their companies than they should be, because we've kind of normalized that there are just these things that are kind of, these constraints are normal, right? And there's no solution to them. When in reality, as with all kind of loops, I think one thing that's very hard to tell with loops is at each place in it, to know you are constrained, you need to have an accurate benchmark. And it's hard to have a benchmark often, but you need to figure out what is a proxy you can use for that. And, in this example, I think one proxy is this case, right? Which is, hey, if this is, if you look at a VC firm, and a VC firm is doing way more diligence on something that actually relatively matters less to them than this matters to you, then that's actually a reasonable benchmark of, hey, what of that could you do? And the diligence might not be the same, but, if you looked at your interviewing process as venture, like what of those things could you actually do? What of those things should you do that you are not doing? And I think that actually with that as a benchmark, I think we'd probably realize that there's a lot more that could and should be done than most people do. And an example of one, right, is, I think that again, with this delta we have between how companies act and how individuals act, for companies or VC firms, we would say that they should be way more active about sourcing and who are all the companies they're talking to, and what are the things that are causing others to kind of to find them and be inbound. What is the outbound they're doing, and what is the things that make people in their network kind of understand what they're looking for, and what are the companies that they would want to invest in, and introducing them to them. And then I think we look at, people running job searches, and they are way more passive about it, right? And I think that is a question of, like, even at the simplest form, if you thought about those 3 channels and optimizing them, what would it look like? And, one simple thing of it is, like, if you just made a list, an explicit Google sheet of all of the companies you are interested in or talking to, and you shared that with your friends, would they actually have useful input or introductions or knowledge about those companies? And the answer for most people here is probably yes. Now, as with all things, every amount of friction that is added there probably decreases exponentially the amount that your friends are going to do, because while they love you, they are not thinking day and night about, the fact that you haven't told them, but you are thinking about leaving your company and joining something or what you're looking for, all of this. And, at the same time, if you actually made it as frictionless as possible for them and removed all those constraints of them knowing the list of companies, them knowing what you're interested in, all of the, them not having to feel like they need to double opt-in, intro you, or all of these things, would it increase how much they actually do run across all of these things that you'd be interested in? I think the answer is pretty definitively yes, right?
Mm-hmm. Zooming out a little bit, we are both young people who spent time in venture capital, and venture capital is traditionally like an older person industry. The LPs are older, VCs are older. How do you think about this concept of what is gravitas?
Yeah, I don't particularly think I have gravitas. So I don't know if I have the answer to what is gravitas.
Is it just aesthetics for older people?
Aesthetics for older people.
Old people aesthetic. What is gravitas?
Yeah, I think I've thought and discussed this question a bunch, and I think it's interesting because I think we don't know. I don't think there's consensus on to your point on what it is to begin with. Like network effects, it's this kind of thing where everyone's like, it'd be great if I had gravitas. And everyone's like, you should have, if you, worked on gravitas, then life would just be, better in all dimensions. And you're like, but specifically, what actually is gravitas? It's like, yeah, it's this kind of quality that I don't, I know it when I see it, but you don't have it. And so I think it is, the first part is what is it? And I think that there's the traditional definition of gravitas, and then maybe different new definitions of it. I think traditionally people have thought about gravitas in this kind of classic VP of sales, or super old school classic way. And I think that, a lot of them do have gravitas, but the question is, have we been too narrow in our definition of it? And I probably suspect yes. I think that there's two directions that I've thought about what gravitas could be, neither of which I necessarily am set on. One of which is gravitas is, and I would roughly define these as the PE value version of this and the not PE value version of this. I think the not PE value version of this is gravitas as kind of reaching a level of self-confidence in the thing you are talking about, where you not only understand it, but understand at least one level deeper of it than however deep you're going to have a conversation with others on. And I think that when you have that, there's a comfort level that people have that is intuitively apparent to people, if not explicit. And I think it really requires being one level deeper in knowledge of it, because when you're not, you don't know when it's going to go off the rails, right? And so it's kind of this ability to not only understand something, but understand why it is the way it is, so that if somebody pushes you, you can actually on the fly reformulate for yourself what is actually the cause of it. But I don't think that's the traditional definition. I think the traditional definition probably falls more in this sense of PE value, which, PE values in companies, price to earnings ratios, are kind of this, there's a technical definition, but the general way I view them is you have this PE ratio, which is hey, what do you think this company is, what is the substantive value of this thing? And then you say, hey, but actually, what's the multiple above that we are valuing it at? And, is this good to value it higher, at 14x versus 5x versus 1x versus 0.5x? I think the answer to that is it's good if you have a good ROIC on that form of capital that it enables you to get cheap. Because a P value, a P ratio, is so that you can get cheap cost of capital. In the financial markets, that's money, but in, as I view P ratios in non-financial markets, that could be social capital, that could be knowledge, that could be whatever. but it gives you cheap cost of capital. And if that is your constrained resource, then it is hugely net beneficial. If it's not your constrained resource, then not only is it not beneficial, but at some point you're going to feel awkward when it converges because people realize that actually there wasn't a justification for you having that PE ratio. And so I think that gravitas is a form of that PE ratio, right? Of people who whether it's because they're charismatic or they have depth in some domain or whatever reason, have the ability to be valued at some multiple of somebody with all of the exact same characteristics except for that. I think that, insofar as you think that things that unconstrains you on is the constrained resource, then it can be super valuable, right? Which is why I think that the question that is a super important question for a bunch of people is, well, how do you go figure out, once you figure out what is your constrained resource, how do you go figure out what is that thing that increases your PE ratio in it? And, as an example, obviously I think it's very unclear right now how this is going to go. I think that historically Elon Musk has had a very high PE ratio, right? And we've seen this in his ability to get, massive amounts of capital at relatively cheap rates in the public markets. And that actually has been incredibly useful for him because he was working on industries, all the companies he's working on are industries that are extremely high capex. And so SpaceX and Tesla do require large amounts of capital to even have a chance to succeed. And so very few people could probably even attempt to do what he is doing at Tesla or SpaceX without the ability to raise the amount of capital that he has been able to raise. Now, of course, that means that the very weak spot of his is the fact that if he stops having that PE ratio and being able to raise capital effectively, then, these are very economy of scale industries that require it. And so, right now it makes sense both that he has actively cultivated and built that PE ratio. It also makes sense that this is the place that is the most existential risk to attacking Tesla because, he actually does have an amazing ROIC on this capital. But the question is, what exactly is the runway he has, right, to keep having access to kind of all of this open capital to draw from?
Yeah. How do you think it's going to play out?
If I knew how it was going to play out, I'd be a far better public market investor. I have no clue how it's going to play out.
Well, it's interesting, just even forget the companies for a second. Elon's reputation, and maybe those things are too related, but it feels like it's, become more of this, like, more closer to like real celebrity, like Kim Kardashian, like drama, and I'm curious, is he sort of like invincible because of like what has he achieved, what has he accomplished? But it's just sort of interesting to think about when the tide turns on someone, how the cycles play out.
Yeah.
Public opinion.
For sure, yeah. Yeah, I mean, it is a fascinating one to watch play out because I think that views on him have become so polarized, and then both sides also have such strong views on kind of the insanity of the other sides of, holding their view and like unethicalness of the other sides holding their view. And I think, just a step back, it is a fascinating thing to just watch out in understanding these kinds of systems because both sides are kind of entirely rational in that his PE ratio, the success of Tesla probably is actually directly a function of his PE ratio. And so it is probably both simultaneously true that if you gave him a unlimited budget forever, he could make Tesla achieve all of the things that he wants it to achieve. And also that if you cut him off and he was unable to have cheap cost of capital, that Tesla has 0% chance of hitting its production targets or scaling up or any of that. And then the question is just somewhere between, 0 months to unlimited months, where is actually that line of what it takes to actually kind of hit its minimum viable stable scope, right? And should he be given that cost of capital? And, on one side, you have people who say, hey, he should just a priori be supported because he is working on things that are net positively useful and are good for humanity. And so there's no price at which you shouldn't be rooting for him and supporting that. And on the other side, you have people who are, at least implicitly saying, hey, actually, there is real value to us having efficiency in the valuing of things in the public markets. And we shouldn't reward people for burning the commons of misleading people to benefit from that system and then using that for their own personal benefit, maybe even for the benefit of others, but at the cost of other people who could also do amazing things, but, would either not get that capital or would, have their things be looked at more skeptically because of the misleading of it. And look, I think that actually both of those are interestingly correct, right? Both of those are a trade-off of exactly what we were talking about before of the stock market of how we think about it, because, the more you think there's a delta, which I have no clue, right? But the more you think there's a intentional delta between the things used to get people to support the stock and the current state of the business, the more it is a burning of the commons. And, in general, there are definitely positive things to be had from that if he builds something that is super successful. But in general, we also should weigh the concerns of anything that, we should weigh the concerns of we don't net want to promote people burning the commons. And so I think that, it's a tough one in that dimension. And the reality is that it is a super open question on, I think that, as I said, like, whether he can achieve it or not is entirely a function of what time frame he actually has to work on.
Right.
And like,
it almost makes it reflexive a little bit.
It's 100% reflexive.
If we think he's a good
right?
business person, he will be a good business
Yeah,
person.
it's 100% reflexive, right? Because, figuring out like the challenges that they have as a company, they may not be figured out because, figuring out how to do this, how to actually build vehicles is a remarkably complex thing. And it takes time and money. And so, like, the question is, will he actually have the runway for that? And what is the runway that is a reasonable runway that he should be supported in having that is for sure in flux, right?
And is Elon or Elon's industry sort of a special case, or are things far more reflexive than we think? Because the implications of that are perception is reality, and PR is really fucking important in that world.
I mean, look, I think that it's not the only thing,
right,
but many more things are reflexive than people certainly do think. I think, one of the prime examples we see in companies very often is that most companies don't think about PR and brand, or when they think about PR and brand, they think about it in terms of customers, when really what it is probably most important for is recruiting. And that never shows up because, it's the thing that you don't measure, but permeates into every decision that people interviewing at companies go through of kind of, well, what companies do I think are, like, what companies do I know? What companies do I think are doing well? What is my general feeling of these companies? And what is that implicit PE-PR ratio that people have of companies is actually incredibly important, but not often thought about because we don't have great ways to quantify it, and we often misread the places where it manifests as being more about something else, like, how we ran the recruiting process. So I think that there's lots of things like that where it does come into play. I think, part of this is we have created all of these kind of, you could say on-chain, but really the thing is common knowledge systems of how that have huge benefits to the companies that take advantage of them and are willing to play by their rules and be constrained by their rules. And, both the general branding and view of people of companies and people, as well as the financial markets kind of financial version of that, are examples of how there's huge upsides and downsides to being known in that, to playing in that dimension. I think a lot of times people view the downsides of it and also the ways in which it feels kind of sketchy. But on the flip side, I think that, the downsides come as a consequence of wanting to have the upsides of it, right? And similarly, the sketchiness of it comes from the fact that this system is not perfect by any means.
Right.
But there's a real need for a system, which is, hey, in the PR version, most employees just don't know most companies. So there's no reasonable expectation that they should have a accurate viewing of what are the companies they'd be interested in working at. And so we need a system that figures out a way to say, hey, these are the companies you should look at and are probably interesting to you. And we've converged on press as the social capital, press and word of mouth as the social capital way, and venture and the stock markets as the financial capital way of doing that. Those both are certainly not perfect systems, but are those systems better than are those systems better than the systems that existed before? Probably, just like it is probably better that we have LinkedIn, right, where you can go actually see a bunch of these companies and be reached out to by a bunch of these companies than before, when you would struggle to figure out what exactly was the name of the company and who was working there and all of these things.
Yeah. I wonder if in the future we'll have a more social LinkedIn. Right now there's a lot of information about, stock market and what people think of you. Like right now we don't rely on third party as much as, we'll do reference checks, but it's a lot redundant. Like we'll only ask like 5 or 10 people where we know hundreds or even thousands of people who have been interactions with us, and there's no way to sort of scalably get their assessment. And I wonder if
I think the sign that there certainly is all of the social platforms, right? Because if you meet somebody a lot of people I meet who I don't know them at all in person, but for years we've known each other or been in lots of conversations together on Twitter, right? And so when you meet, it's not like meeting a stranger, you already know them, right? And so, and just like, the softer form of this is, dating apps have obviously show you who your mutual friends are, right? And there's all these ways in which you really have a view of, do you know people in common? Or do you think about the same things? What do you actually like as a person? And I think that, we're already well into heading into that world, right? Where there's just way more iterations and just passive kind of knowledge of and interactions with people that you already kind of have a bunch of built-in social bridges even before you go meet with someone in person, right?
Totally. One thing we've talked about in the past is this concept of reading people in addition to reading books. And I'm just curious how you think about learning broadly, information diet, reading people versus books, how you read books.
Yeah, definitely. Reading books is fantastic and supremely underrated. I think that the reading people to that your views is like, I think that, people who you resonate with, kind of like, someone has distilled a neural net where the node has distilled, 20, 30, 40, 50 years of all of the information they've processed, applied their filter to it, and then kind of transferred to you. And, you need to calibrate and back propagate and kind of understand exactly what their biases are and how much they care about the same things you care about and all of that. But you can kind of not only get all of that from them, you can then interact with it, right? And go down all sorts of directions and keep pushing down it. And then both of you can kind of even feedback loop on that and kind of talk through new things and push it forward. And so I think that there's a ton of benefit to that. And, I roughly think that I have not experienced any upper cap on length of time you could spend talking with somebody who you resonate with highly. For example, I remember, one of the things that always confused me a little bit about venture, which I understand, but confused me a bit, was that all good meetings, by definition will go over, right? Mm-hmm. Because you realize that there's just so much more to talk about. But if you schedule every meeting back to back to back, then every good meeting will have been way too short and every bad meeting will have been way too long. And you won't even have gotten, the first hour of talking with someone, the likelihood that you will actually have figured out the frequency to resonate at where the throughput is highest is probably pretty low, that you have kind of peeled back all of the layers of the onion, right? And so there's just so much more depth that comes, I think, even as you talk to the same person over and over again, in then building increased kind of resonance and shared language that make it possible to both open up more and talk about things you wouldn't with other people, and then also to go so much deeper and go in interesting directions. And so I think that is super underweighted and incredibly useful. On the information diet side, I don't think I have a perfect system for this. I certainly think that everybody I know seems to be trying to figure out what is the mixture of, reading books and their PKM and how to take notes and reading articles and whatever that works best. I think, one of the things that I've found I really want more of and love is, what are all of the documents that people find or people write that, you would love reading if they just default shared them with you, and how you get people to do that, and how do you do that with others. And so, I've seen, I think independently, a bunch of friends of mine have experimented with that in ways that I found super interesting, where it's either things ranging from kind of them doing different experiments on how to read and summarize and analyze books, and then also share that with a group of people in some format that, then lets you kind of build off of that and discuss it or unpack the thing or whatever. And similarly, how do you get people to share the kind of writing that they're doing, whether for work or for fun or whatever, and increase that throughput so that, you can get all of these essays that are even more tailored to your interest. And so I think part of it is like, how do you increase both of those, has been, if I think about the top things I've read over the last year or so, all of the top 10 probably fall into one of those categories.
Is there a way you think about becoming an expert in the field, say like crypto or transportation, in a way that is different than normally people think about becoming an expert, which is, read everything, talk to everybody?
That's a good question. I don't really know what the common way of becoming an expert is, so I don't know how much mine differs from others. I think some of the things I think about in becoming an expert in something, or at least in my case, becoming passive, adequate, mildly adequate in things is a few things. I think the first one is if you can find a way to have a stake in it not rationally, but it dramatically increases how fast your rate of learning on it will be. Crypto is a very easy example of this, or the stock market, where, if someone wants to learn about it, the easiest way to do it is to have them just put in any amount of money into it, not because they're going to make a good decision, but because the amount that they actually care and spend learning about it, when they had nothing at stake there versus they put any amount, is orders of magnitude off. I think that in crypto this is super true, but even when I was young, I think at one point my parents convinced me to do this with the stock market. And I put my money in a stock, and then the stock went down and I immediately panicked. But the amount I actually cared and spent just understanding all this stuff and its practical usefulness to me was just so much higher. And then similarly, I think that, what you're doing with this podcast, right, or just talking to people is exactly the same thing non-financially, right, where, but on time, which is maybe even more so, and also, I guess, looking awkward in front of strangers, which is even more so maybe a factor where it then just forces you, right, and it's very clear what is success and what the feedback loop of it is.
Various layers of skin in the game.
For sure, right? I think another one is kind of figuring out how to get to the most basic adequate is the sequencing of loops to kind of get deeper and deeper in it. And so that's figuring out, first of all, what is the kind of basic layer of things that is embarrassing to not know and to be a base of conversation? What is the things that is cross-applicable from areas that you understand that then, need to be modded in some ways. But as long as you understand the structure of the thing you're trying to study, you could mod it in those ways. Then using those to kind of hit the activation energy of getting deeper in the space of figuring out who are people who, will talk to you and help you understand the state of things and what people are thinking about and how to think about them and expedite you getting to the current frontier of those industries. And then also, then figuring out from there what are all of the things to go deeper in it. I think that part of that also is most industries in general are probably have way too little understanding of what is the things from other areas that apply to their industries and how to think about how, their structural dynamics are kind of similar with a few mods to pre-existing structural dynamics in something else. And so I think that, once people start to intuit that, it becomes a lot easier to understand, hey, I know marketplaces, but not social. What are the kinds of similarities in understanding it? But then what are also the things that I need to go think through how it changes, right? And how to change that.
If you're 2 years in with a person and maybe you realize that they're no longer resonating with you in the same way, you've already been compounded. You have so much sort of at stake.
Yeah.
It sort of puts pressure on just making sure you're selecting the right people, or how do you think about that?
Yeah. I mean, I think, you could view that in a good way or bad way, and it can be both. I think that the classic example of this is dating, right? I think that, one of the questions on relationships or marriage or whatever is, where does your enjoyment, fulfillment, whatever come from in the relationship? And, there's things that range from you share the same interests to things like there's some part of it that is just from the compounding of the relationship, right? And all of the shared language that you build with this person, right? Which is obviously a thing that gives people pause in both directions when they think about both what does it mean, what does it mean after a breakup when you don't know, right? Like when nobody else you meet probably has that amount of shared compounding of shared language yet with you. And also, how do you accurately weigh, what that would look like with someone, right? And so I think it definitely is the case that happens in all human relationships, whether dating or, professional ones or friendships or whatever. I think that the exit cost of it is still always relatively low in that it means that you may find out that there are people who you've only just met, who you feel like you probably would resonate with very strongly, but, compared to others that you've known for years and years and years because they were, family friends, right. You just know those people better. I actually, in general, don't worry about that, except for the case where you think that that you have hit the limits where time is fundamentally a scarce resource. I think that, time is fundamentally a scarce resource for most people. Certainly myself, I'd say that my time mismanagement is definitely more of the thing that makes it a scarce resource than actually any constraint on time. And so, I think that the problem tends to less be, hey, there's people who you have compounded with for so many decades, but actually don't have that much you have in common. Like, what is the correct way to make a decision on where to spend time, as much as one of, hey, how do you actually make sure that you don't get lost in the day-to-day of all of the stuff you have going on and forget about all spending time with people you care about, right? Whether personally or professionally or whatever. And, in general, I find that probably tends to be more of the constraint than having to make a raw trade-off in, the different levels of how well you know people versus how much you feel like you resonate.
I don't have an amazing segue for this, but we're going to close on it. Your thoughts on Judaism and Christianity?
You're trying to convert me to one of them?
Yes. You can guess which side I'm on. Please.
Yeah, I mean, I think that, as I said, I think all human organizations are relatively topologically equivalent. And I think that is true of religions as well. And, if we think that a lot of these companies or protocols should be modeled as cities, it's not obvious that religions isn't something they should be modeled off of as well. And it's kind of this artifact that everybody understands and we know and have a lot of shared context around, but has kind of stopped having the primacy of role it used to have.
Right.
And the question is are there attributes from it that actually are being adopted into all sorts of these other areas?
Like
or
unbundling.
Yeah. Or are there things to learn from them that also could be, right? And so, there's clearly a bunch of things to learn from them. Someone once told me that, Paul may have been the original growth hacker. But I think the fascinating thing about Judaism and Christianity is how opposite they are on a bunch of dimensions. And, Christianity or specifically Catholicism, is so centralized in approach, and Judaism is so decentralized in approach. And I think that there's tons of lessons to learn from both of those, right? And, similarly, or additionally, I think that both of them have this fascinating characteristic of how do you decide to pass down what you view as the cultural norms, and how do you pass those down, and what is the kind of habits and rituals and things you create in order to do that? And they've gone about it in very different ways, right? And I think that's super, super fascinating to unpack. And there's kind of this almost stigma, it feels like, of people, trying to understand those better, when it feels like those are one of the few things we have that have thousands of years of literature that is that we literally could go look at to try to understand all of these dynamics, and versus most other things that have really not done nearly the amount of job at trying to figure out how to compound and sustain for nearly as long. And so I think that probably a friend of mine, Dan Wang, who spends a lot of time kind of studying the Chinese government, told me once that the Catholic Church is actually one of the main institutions that the Chinese government has spent a bunch of time and has a bunch of people studying to try to understand takeaways from. And that seems kind of apt to me because, if you think about building institutions that have lasted as long as they have permeated, all of the financial, social, and personal norms and capital of people, and also seem to kind of operate on a different dimension than the traditional corporate structure we've had. Religion has been probably by far the most successful one. Right?
Yeah. To close, where can people learn more about you online and this course? Where can they sign up? And perhaps, if you've listened to this the whole way through, you resonate with this, the listener. And so what's your sort of, some people have requests for products. I'd be curious if you have sort of a request for experimentation in terms of where do you want people who resonate with this conversation or you generally to be exploring more or thinking more about, or? Yeah.
No, thanks for having me. My blogging is pretty infrequent. Hopefully we'll pick up, but you can find me on Twitter, where I am probably on more than I should be. And then, the Reforge class, if you go to Reforge's website, there's 3 classes happening right now, one on kind of growth, one on retention and engagement, and then the one that Casey and I have been working on growth models. All of them are actually great. Definitely check those out. And then in terms of the things that I wish people would work on, I don't actually know off the top of my head which are the companies I think people should work on. I think the things that I wish people would work on more outside of companies is figuring out what are actually these new kind of form factors and ways to participate in the commons that we should have. And so I think that, I'd love to see people sharing more of the stuff that they work on and think about in public or with their friends. And I'd love to see the discussion of that increase a bunch. I think that one of the things that I worry about a lot currently is I have a bunch of friends who currently kind of feel like they are disengaging from the public comments of Twitter or whatever channels, and they worry that it's becoming too toxic. I actually worry the opposite, which is that it's becoming that people will leave it. My general view is that you could roughly think of Twitter and your or whatever public spheres as like your neighborhood, and a lot of people seem to be afraid that there's a lot of drive-by shootings. But in general, I'd say that like that is less of a thing to say. Let's all go away from, versus how do you actually strengthen that, right? And figure out how to have more things happening and more discussion happening and more people kind of figuring out new ways to increase the amount that everybody is able to share and collectively push forward what, how we think about industries or companies or how to read or whatever areas.
And so how do you say to those people who are worried about the drive-by shootings, do you say, they won't happen, or they might happen, but it's still better that you participate and maybe take one for the team, or maybe better for the collective?
That's what I say to people who suffer from drive-by shootings too. Just take one for the team. A few things. I think that the most important thing is that they should weigh the positives with the negatives, right? And the positives are very high in that, for most of the people, I probably would not have known them if not for Twitter. And so similarly for a bunch of their friends, I think that there's a bunch of positives that, it's hard to maintain a thing that is as permissionless or open a top of funnel as Twitter. And so there's a lot of value to having that. And then I also think that, understanding why the negatives are happening and why we should probably expect them to change over time is also important. And, I think that there's a lot of reasons the negatives are happening, but two of the key ones are that, one, the negatives are happening because, we have this thing that is, we actually don't have social norms or legal norms around yet, which I would roughly call kind of pseudo-celebrity, where, it used to be that celebrities had reduced kind of privacy laws because we were like, they're super important people, they're of public interest, they're benefiting from this public interest, and there's no way we could stop paparazzi from following them. So, probably we'll make the laws have this kind of odd loophole where they have diminished privacy expectations. And we were okay with this trade because we thought that they were benefiting from it. And so they kind of could opt out of it if they wanted to. But now we have this system where social capital is much more distributed, where, your one tweet could randomly go viral, and then you're kind of obligated to, put in your SoundCloud link and pimp your SoundCloud account, but then it'd be like totally off guard, right? And sometimes for the positive, sometimes for the negative. And people are unused to this because there's this weird pseudo-celebrity, which we actually don't know what our legal norms around that are. I think the two biggest questions right now in our laws around this are kind of this one, which is about what are the privacy expectations of people in this world where anyone can temporarily become a person of interest. And then similarly, what is the view of whether we view distribution as speech or not? But I think that, if you view that as the reason this is happening, for a lot of people who are feeling the negative effects of this, it's because their tweets are getting out into the wider air out of context. And then this group of people who they don't interact with at all and may not agree with at all has found it and decided to come in, right, and attack them. And I think that, we haven't figured out the social norms of that, and the attack profile vector is very high because people have realized that social is is actually impactful, and so it's valuable. And so because it's valuable, it is valuable to try to regulate and impose your views and norms on others. Sometimes that is correct, sometimes that is incorrect. But I think that, that's a work in progress that we're all figuring out. And it's not, I think that harms of that while true, are things that, are not going to get better with everybody actually retreating from that. They probably will only get better with everybody actually engaging with that and leaning into it and figuring out what is the ways to actually maintain the benefits of the kind of productivity gains we've had of the internet being relatively open without letting it close off too soon, now that people have realized that it is super open and valuable, which makes it a good attack vector for a bunch of these things.
Louis C.K. once talked about the optimal level of fame being like only known for people who you resonate with, and not known for people who you don't resonate with.
Did he actually say resonate?
No, he didn't say resonate.
Oh, okay, I'd be so impressed.
He did not say resonate. And he probably went overboard.
Yeah. Certainly, I think that one of the ways I've thought about optimal fame is there's certainly an immediate step function drop in your happiness at the second you need to hire bodyguards. So there's probably like a 50% drop in your happiness the day you realize, if you ever reach a point where you're like, I need to, because I'm too famous, need to hire bodyguards. So there's definitely a diminishing return on some part of it.
Yeah. Kevin, it's been a pleasure. Thank you for coming
Thanks
on.
for having me.
Yeah, I appreciate it.